Hello, hi, good afternoon, everyone. All right, I'm James, and welcome to SOW for this week. And SOW basically means start of week. And what we intend to do is to really bring to you the latest money-related news, as well as tips, so that you are able to get the latest information, and then you can better manage your finances and grow your wealth. All right. And then usually, right, I will do this together with my partners, okay, my two other co-hosts, who is Zhong Jie as well as Gaius. But apparently, right, Gaius is now on COVID. The whole family is now, so he won't be able to join us. And then today is Zhong Jie's birthday, so over the air, I just want to wish Zhong Jie uh, happy birthday. All right, let me see whether if he's tuning in. All right. And for those people that are tuning in, right, just want to talk about what are some of the things that has basically happened over the weekend. Okay. And before I start the topic, if you would like to follow us, we are on Spotify. So if you can search, we are MAP, you should be able to find us. The picture of the three of us, as a cover photo. All right. And if you search for us, right? We are on Spotify. At the same time, we are also on YouTube Live. Okay, so if you need to take a look at our videos again, you can always go to YouTube. Again, it is We Are MAP. Alternatively, on our Instagram, so I'm actually having two screen right now, Instagram as well as Facebook Live. Okay, so we are on both locations. So if you want to catch a replay, to just come back again. Great. And just over the weekend, right? I think a couple of things has really happened. Okay. Something that it's a little bit more relevant. Okay, to all of us. And let me just start with uh, s- some of the news first. Okay, that is closer to home, and then after that we can talk about what happened in slightly, in the overall market range. Okay, so something closer to home. Okay, just in Singapore, right? I think just over the weekend, from the Straits Times, there's this article that talks about a couple, okay, who have five young children. They earn a combined income, okay, on delivery for about $4,000. All right, yeah. So that this is basically a continuation of our earlier topic, right, which is on how to better increase your income. All right. So if you want to know what we teach you to add value, right? Just look back on our previous video, YouTube, Spotify, Instagram, right? Okay. So yeah, so I think they have a combined income of $4,000. I think it's not easy, okay. But they are able to raise five children, okay, based on that. There was one article. I think it is good to just take a look at it. And what I understand from that article, right, it is really about how you better manage your money. I think in the article they do talk about having a better understanding of their finances. I think these are something that is important, especially during this period where the inflation is going high, right? And this later on leads it to my topic later. Okay, the main topic later, but it's just some interesting article to just share. Okay, so they were talking about that they work really hard, and then one way for them to manage their expenses, right, is really to manage no one way to make sure that they don't overspend. It's really to manage their expenses. And I think this is a good period now to start managing and looking at your expenses. If you hasn't had any apps, I think you can use application, right? I think it's getting easier nowadays. If you want to manage your expenses, the best way to do it is to just download an app. Okay, that will probably be the easiest, to download your app, and then you should be able to manage your app, track your income, track your expenses. I think that is one good way to do it. I've seen people, right, who have does it using Excel. So if you have a more interesting way on how you manage your expenses, right, you can always type it in the uh, chat. Whether is it on YouTube, Spotify, or Instagram. Okay, we'll be happy to take a look at it. and then more people can also understand how you better manage your expenses. But at the start, I think you can use one of the app was developed by us. Okay, it's called Money CEO. It basically tracks the inflow and outflow of your money. I think this is something that's important. Okay, that you can look into also. And then over the weekend, right? No, and from this topic, right, it basically links me to the topic that I seriously want to talk about, which is inflation. Okay, I'm not sure whether I'm sure by now every one of you know that there's a war, right, in Ukraine. Okay, Russia and Ukraine. Okay, so the Central Europe area. Okay, and because of this war, that because of the war, it basically dries up all the raw materials such as crude oil with the sanction, with the, I wouldn't say sanction, with the restriction on export, import on Russian crude oil, right? It basically drive the crude oil prices higher, much higher than expected. And yeah, and then I was just thinking about it. What basically affects that, and then if you think harder, right, almost everything, okay, you need oil, you need crude oil, you need oil to power up, right? One thing is you need to power up your engines, other than power up our cars, right? But you need to power your engines, the engine then manufactured items, and because the raw material has gone up, and therefore it drives up the consumer goods as well. Okay, this morning I was at the hawker center, just talking to some of the hawkers, coffee shop owners, and all this. They were all saying, right, that their utility bill has gone up, and some of them has really gone up by close to 100%. I'm not sure about yours. Okay, if your household has it gone up, and I suppose it has. Okay, so if it has gone up, right, I think this is also one reason. Okay, and because of this goes up, therefore it affects the services or product that has been manufactured through it. So crude oil has gone up, and any disruption to the Central Europe, right? Yeah, like just yesterday, I was talking to a friend from the port. The company manage port in seaports. So Central Europe's once there's a war, right, it basically disrupts a lot of the logistics as well. Okay, and then plus the China hasn't really been opening up, right? And because China hasn't been opening up, therefore it again disrupt the logistic flow, okay, of the market. And again, instead of waiting for one day, you need to wait a couple of days, before the products comes in. Therefore, your goods that is stored in the warehouse take a longer time, to be sent to the consumer, and all this again add up to the cost, and that's the reason why it therefore drives up inflation. And just over the weekend, or just yesterday, right, there was this article really hot from the oven, right, talking about this again. This is from the Straits Times, talking about the U.S. Sorry, this was actually not from Straits. This was from the BBC News that talking about that U.S. inflation. I'm just reading off the headers. U.S. inflation has hit the 40-year high. Okay, and initially when I was thinking about it, right, wow, 40-year high sounds very scary. Yeah, so I let me just take a look. Yeah, 40-year high, and then after that, right, I go and dig back. The chart, and I'm looking at the chart right now. Okay, it was talking about the U.S. inflation. I think U.S. inflation has one of the highest point was really in the 1980s. Okay, over about 12-14%. Okay, but it has been staying below 6 or maybe 5 ish percent. Okay, for many years since the 1990s. Okay, and even in the just this yeah, even in the earlier 20s, right? Yeah, it has been hovering, but most of the time it is below 3%, below 3%, and this has been the interest rate so far. Okay, and sorry, this has been the inflation rate so far. And when inflation rate runs high, right, what happened next? Okay, of course, if you know, on Monday, right, the Asian market, hearing that the inflation has gone so high, okay, the market basically had a reaction to it. Okay, so market didn't perform very well. Actually, it hasn't been performing very well for the past couple of weeks. So just yeah, so just yesterday, I think the market has turned red. Okay, and one of the biggest headline the biggest headline, right, that you will see was really um, the US consumer price index has hit a new 4-decade high, raising to 8.6%. Okay, and this basically uh, it was really unexpected. Okay, by all the economists, okay, all the smart people, right? Unexpected because they thought the peak would somewhere be in March, but indeed, May has gone higher than that. Okay, and I'm just looking at the US interest rate right now. 8.5%. So over this year, right, I think since the war broke up, the inflation has gone above 2%, above 4%, above 6, and then the latest one US has released, right, was 8.5%. Okay, and yeah, and because of this, right, the market dropped. And then, but I was just thinking, right, that maybe the best topic to talk about today, right, is really to share with you what happened. Why did the market drop? Why is this inflation so important? And then, if let's say you have got money, right, what should you then do? Whether you have rising interest rate, or maybe in future, right, decreasing interest rate, and can just focus a little bit on that later on. Great. Wait, let me grab my coffee first because it's supposed to be SOW coffee talk. Okay. Mm, so, let me just take a look at this. Okay. Uh, yeah, and then so to curb inflation, right? One of the way to curb inflation is really to increase the interest rate. Okay, and I'm talking about the general market, which is the US, the UK, London, and as well. Okay, if you're staying in Singapore, right? Just a recap: Singapore government do not manage interest rate. There's actually two things to manage the monetary policies. Okay, one way is to manage the interest rate. The other way is to manage the, make a guess, foreign exchange rate. And this is what Singapore believes in, which is to manage a baskets of foreign currencies. And then so the Singapore government makes sure or intervene. As long will only intervene as long as the so there's a band. Okay, there's a higher band and lower band. And so this basically, so the government basically allows the Singapore currency to appreciate or depreciate within this band. Okay, so this is how the Singapore Central Bank manage our interest rate, and then to curb against inflation. Okay, and because the US, so let's talk about US first, because the inflation rate has been going up steadily, right? And one way that the Fed, okay, the Federal Reserve, right, has already mentioned late part of last year, early part of this year as well, that US government is going to increase their interest rate, and indeed the interest rate has gradually been going up. Okay, and later on I'll talk about what happened, okay, in the nearer term. So has been going up. So let me just read out the rates to you. Somewhere in, I think the last highest point, right, was somewhere in 70708 range. Okay, that was during the Lehman Brothers, okay, period. Okay, and that rate was slightly above 5%. Okay, that was the highest point earlier on. And over the past 10 over years, right, 20 years, indeed, the price has been steadily hovering between less than a percent. Okay, slightly in 2012, 2013, during the European debt crisis, right? Again, it is to manage inflation, right? The interest rate has actually gone up, but it has gone up to below 2.5%. Okay, the nearest was actually in 2019, slightly before the COVID happened, right? Interest rate was at about 2.4, 2.5 ish percent range. Okay, this is the US Federal Reserve rates, but it has gone down since, and because the inflation has been going up, and therefore US is talking about increasing the interest rate to curb against inflation. And how does increasing interest rate then curb inflation, right? Okay, yeah, because as they increase the interest rate, right, basically it also means that you know uh, the economy is inflated, okay, and because of inflation, right, and therefore they want to increase the interest rate to cool down the economy a little bit, okay, and this is the reason. So let's talk about what happened, when the interest rate is rising. Okay, so if the interest rate is rising, right, what can you do? Okay, when interest rate rising means that again government wants to cool down an overheated economy, okay, and also to reduce inflation. And this is really the main reason why they want to keep the interest rate going up at this moment. Okay, so it also means that higher borrowing costs for businesses. Okay, so now you see the picture, right? Business is not just affected by the rising raw materials, but they are also affected by the interest rate as well, because their borrowing going to be more expensive. Okay, and therefore some businesses, right, will likely halt some projects, okay, or maybe reduce their growth plan. It makes a lot of sense, because maybe I have a project that's ongoing. I need a lot of capital, and the interest increasing interest rate eating out a lot of my capital. I may halt some of the project, or I may just slow down my expansion plan at this moment of time. So what can consumer like us do, right? Is that one way is, if you have spare cash, I think it is really to hunt for quality bonds, okay, quality insurance, endowment savings, endowment plans, okay, quality one, okay, that can give you better and more stable returns, okay, and you can also hunt for quality companies in the financial sectors, because with this rising interest rate, right, the returns for banks interest return is going to be higher, okay, and this will generally benefit some of the financial sectors, okay, such as banks, mortgage company, insurance company as well, okay, as the interest rate is rising. Okay, and over here, right, I think there will be some of us, right, who may have been invested in universal life or endowment plan, okay, because you leverage and do a premium financing. All right, I'm going to talk about that later on, so that yeah, so that we finish this part of the topic first. Okay, so what are some of the sectors that you can look into? One, like I mentioned, right, financial industry, financial sector is something that you can look into. Some of the fixed deposit rate may also increase, okay, and this may also entice savers like some of you, right, and then end up yeah, so you will maybe exit from the equity market and then put your money in bonds and put your money in insurance company and etc., and therefore you will cool down the overheated economy, like what I mentioned earlier on, right? It is rising interest rate. But on the reverse, right, when it falls, I'm just going to quickly talk about it also, so that when the interest rate fall, you are aware and know what to do with that. When the interest rate fall, right, it means that it's cheaper for business to borrow, and therefore business will start borrowing. And if you are in this scenario, right, you should then look for investment with a better return. That means take out your money in the fixed deposit savings and look for investment that is of a better returns. Okay, so a few areas that you can look into, right, is growth sectors, okay, equity in growth sectors, and that's the reason why you see startups, tech has been growing tremendously over the couple of years, right, because of the low interest rate environment. Okay, and then also you can look into endowments, bonds that give you a higher returns. Okay, and just now earlier on, right, I did mention about what happened if you have leverage yourself, okay, by getting into a universal life or endowment plan. So the first thing to evaluate, right, is that the what is the reason, okay, why you decide to take up a leverage scenario in the first place. The reason why you are taking up a leverage, right, because mainly because of two reasons. If it is for universal life, I think the intention is because you want to leave behind a legacy for your next generation. Okay, if that is the case, right, then there's not really nothing much to worry at this moment of time, because interest rate cannot be staying high all the while. If you look at the past record, right, interest rate only peak for a period of time, okay, and usually it is a couple of months, and then it will go down, because the intention, like what I mentioned earlier on, right, the intention of rising interest rate is just to cool down a overheated economy. All right, so it's not going to stay long, because if you stay long, right, it's going to affect economic activity as well. And that's the reason why central government wants to keep it down at a manageable rate so that economy continue to grow. Okay, but maybe sometimes they don't want it to be growing too fast, overheated, and that's why they increase it to taper it down a little bit. So if your intention for universal life is for long term, for legacy, I think that is really nothing much to worry about, especially when the rates only goes up for a short period of time. Okay, so not so much worrying. Okay, most important is that you continue to get the coverage you need. Okay, that's the most important. If you have leverage on endowment plans, right? Okay, again, you should look at this endowment plan that pays you a cash out. Okay, is this cash out relevant? Okay, for you at the moment, because it must be able to cover the interest rate returns. Sorry, the interest rate that you need to pay back. Okay, but usually it is enough because I think because the rates that you have probably taken up before and I'm talking right now, right, it's probably less than 1% or 1.5% and below. Yeah, and usually the insurance return gave you a decent 2.5, 3%, and some of them has got promotion for 1 year or 2 years. That give you a fixed return over this earlier period. Yeah, so again, it is not so much of a concern unless the interest rate has gone beyond the projected returns. But like I mentioned earlier, right, if the interest rate is rising, there are a few sectors that benefited. One is the bank, the other one is insurance company, because insurance company tends to benefit from this because now their returns is higher and then therefore they can return more back to the policyholder. That's another way to do it. Alternatively, right, you can also look into a leverage. Not leverage. It's hedge scenario. Okay, so you can hedge your position, and how you can hedge your position, right, is that the excess funds that you have, right, you can hedge it against unit trust that can give you a better returns, or you can hedge it against bonds or other products that can give you a returns. Okay, so that you don't need to touch the original intention of getting the universal life or endowment plan in the first place. Okay, and I think most of the time when you get it in the first place, right, it's because of the leverage returns. Okay, and it was really because of this leverage return. I think the best way to talk about it is like your property. When you buy this property, the reason why you buy this property is not just for own stay. Some of us buy it because of investment, and 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 you can actually finish off paying the loan, but maybe you choose not to, right? The reason is because you want to leverage that. So it is that leverage return that we are looking at. So a near jerk reaction of interest rate going up in this couple of months, right? I think it doesn't really means anything, especially when we are talking about your loan tenor is a 30-year. So it's just I don't know, like a couple of months over 30 years. I think no need to worry so much about that at the moment. You should just look at how the rates is going to pan out from now until the end of the year, and then you see what's going to happen. So if you have additional fund, right, you can hedge your returns, or you should look at the returns that the insurance plan or the universal life pays out. Okay, and who knows, maybe it is higher than the interest that you are putting that you are paying. And if you look at the overall internal rate of return, right, it can be higher, it can be better also. So if it's better, then there's really nothing much to worry about. Okay. Yes, and that's all right for the start of week. Okay, if you're not comfortable seeing me alone, right, because my the other two hosts one is celebrating his birthday, the other one not feeling well, yeah, and therefore I'm hosting this alone. Okay, so if you have any feedback for me, do let me know. My name is James. Okay, drop me a comment, drop us a comment. We're more than happy to look into your comment. And lastly, we are on YouTube, Instagram, as well as Spotify. So once again, thank you for joining me on our weekly podcast for start of the week, SOW. Okay, the intention of SOW is to update you with the latest money news and money tips so that you have a better understanding of the news and tips, and so that you can better manage your finances and grow your wealth. All right, once again, I'm James Chen signing off, and see you guys again next Tuesday. Okay, bye.